Oh, yes, it is. It's the midweek stock market update, the part of the week which makes your life worth living. Here we go. Technology stocks, all of it still on a price to earnings ratio, looks expensive, but the market is not factoring in the massive boost that we're going to get in earnings. Yes, thanks to AI. You might say a multiple of 322 on Amazon seems a bit rich. Well, these things do move on momentum as well. So don't foolishly, as some silly hedge fund managers who are just perennially pessimistic like Michael Burry have said, oh no, it's overvalued. Yes, it is overvalued. Doesn't mean the share price won't continue going up. It's a pretty straightforward, logical conclusion to draw, but he's incapable of doing it because he can only see negatives, still living off the 2008 crash. And of course, if you keep saying negative, you might get it right once every 200 years. Energy, banks looking cheap. The market all having a good week. We're keeping a close eye on it. That's why we do a Wednesday and a Friday. You know, if you think this is a bandwagon which is going to fall off a cliff, like in 2000 when we had the stock market, the tech.com boom, well, that's why we keep an eye on it, because the idea is it doesn't matter getting on a bandwagon. All you got to do is jump off before it falls off the cliff. So we watch it on Wednesdays and Fridays. So make sure you bookmark this highlight of your week. Okay, so this is where we are right across the board. And again, it's been phenomenal. I can't believe we're up 12% on NVIDIA. And I'll go through this in a second. And Alphabet and Amazon and Tesla and Microsoft. Of course, you've got the suicidal bunch who have been sitting on the sidelines looking at their pensions and thinking, oh my God, I'm down 10%. What the hell's going on? Yes, those are called UK investment trust fund managers that you've been trusting, or IFAs. I know, they should be behind bars or some other way, maybe bottom of the ocean. Instead, that's what your pension could have been doing. And we keep a close eye on it. Wednesdays and Fridays, like I said, we keep an eye on all this. I'm going to go through the charts in a second. So I can't believe my pension's doing better than I thought it would this year. I thought this year was going to be a little bit more like last year, not as good as 2021, which was, again, a 40-50% rise because the market just rose that much. And this year, again, stupid rises, which, thank God I got my education in finance. So where are we on another measure of valuation, price earnings growth ratios? PEGs, again, everything looking expensive, which is why if this is a bandwagon and we're on the back of it, we're keeping a close eye on things so we don't foolishly just buy and hold forever. So where are we? Well, we're up 44% on the NASDAQ, and given that we cherry-picked, I'll show you the stocks in a second, cherry-picked the best of those, which are up between 50 to 100%, it's pretty good. The Standard & Poor's is up 18%, so even if you did 18% at the half-year point, you're doing well. The UK markets are up just 9%, so most of my UK friends who are not on my program are just crying, really. Sorry, but I have been saying this for about, 23 years now, that please, guys, don't just... Sorry, the video's gone off, probably sensible. Don't just take it as read that your pension will be in safe hands with an IFA and an investment fund manager. So where are we in the S&P 500? You see, I'm going to draw this image here. You see that bit going up and up and up. That's more than I expected, which is great. But this is the secret. Okay, I'm going to tell you the secret. That's the monthly MACD. All right, that's the MACD. There's the monthly. And that still looks projected to continue rising. If it looks projected to continue rising, that suggests to us that, you know, good, happy times ahead. And we keep an eye on it, and we're still bullish. The FTSE, as I've been saying for months, is projected to go lower, and there's the momentum. It's a bearish divergence for those who know about those things. So that's not good, is it? Apple, where are we on that? Well, we're up to here. Even if that pulls back a bit, we're still in an upward channel. So I'm still happy, as are all those banks. That's where we see it going. So, as I say, I'm not worried at the moment. I don't need to think, well, what's going to happen to Apple in 15 years? I don't need to worry about that. I just need to worry about how does it look at the moment. And I can tell you how it looks at the moment. Looks perfectly fine and good at the moment, okay? You know how to read this because I do it every week on both my Telegram channel and YouTube. If you don't know where those are, alpeshpatel.com/links. Alphabet, similar story. Not worried at the moment. keeping a close eye on it. Microsoft, thank you very much. Surprised that it shot up again. And yet again, I think I will probably buy some more after this call, which is why I do these calls. It's just to let people know. Now, if you've got somebody in a sovereign wealth fund who didn't get into my hedge fund in 2004 and would like to give us $1 billion, put them in touch with me, because they probably regret not doing it back then, and I'd be most grateful if they recognized talent. There we go. That's the direction we're still looking at for this. And Amazon, and you can see a bit of negativity there, and you could go sideways before you go up. You could see the stochastic drop, but I'm not seeing that happen at the moment, and I'm pretty happy where the things are going as things stand. Okay, so that takes care of that. Now, not everything I touch turns to gold. Disney hasn't, but I'm still keeping hold of it, and I'll keep an eye on it for this. And, you know, as with Wells Fargo and Morgan Stanley and Macquarie and Citigroup and Deutsche Bank and Credit Suisse, I too am disappointed that it hasn't gone up, but I don't just want to have tech stocks. That's where we are on Disney. NVIDIA, you know, I said before, if you're risk averse, you'd take your profits. If you're risk loving, you'd hold on. And I said, we're going to keep a look on this. We do expect to pull back at some point. That's why we do the weekly updates. And we're not looking to trade our investments. Nevertheless, this still keeps going up and up and up. And it's that AI thing. Really, the market has not appreciated just how big a story this is. It's the internet all over again. My wife hasn't appreciated just how big and significant it is. You know, if I can't even persuade my wife, then what hope is there for me persuading you guys? So there we are. You might say my wife knows me better. There. That's what we're expecting. So still bullish on Tesla. And to be quite honest, straight after this, I should probably just double up on everything that I've already invested in. But obviously I won't do that. But let's face it, I probably should. Meta, Chipotle, well, glad held on to it. It looks like it's going to resume back upwards by the looks of it. But we'll keep an eye on it and still like it. ServiceNow also looking good. So that's where we are with all of these. Just wanted to show you a whole bunch of stocks. Have a look at my campaign for $1million.com. If you want to join the Great Investments Program and learn how to manage your pension properly and responsibly yourself, instead of shoving it into investment trusts and IFAs who destroy your value, or going for name recognition like Fundsmith and Scottish Mortgage, which have been appallingly poor over the last 18 months, then again, have a look at the links in the bio and get in touch. Thank you very much.